Happy Monday to you from the floor of the CME here in Chicago. I'm Oliver Slope with iiTrader and your grain market update. Kind of a mixed bag across the board. I want to start looking at the corn, the December contract, kind of trading both sides of unchanged really since the Sunday night open. 346 to 348 is going to need to hold as key technical support. We've tested that 6 times over the last year, going back to last May, and have held. I think if we test that again, we could potentially see that give way. But if we manage to hold that, I think you see some bargain buyers step into the market. 368 to 370 and a quarter is going to be the first line in the sand on the upside. That's last Friday's high, as well as a key Fibonacci retracement. If the bulls manage to get a close above this level, I think we could see some continued buying into the market. A couple key things to look at. Friday's commitment of traders reports showed that the funds are now only net long about 14,216 contracts. So this is quite significant. They've reduced about 171,000 positions over the last 2 weeks. So they're essentially neutral as we stand here this morning. Crop progress is supposed to be released after today's bells. A lot of analysts expecting unchanged conditions. 76% good to excellent rating for that new crop. Moving on to the soybeans, obviously a little bit more volatile of a session. 1064 and 3/4 is going to be a key topside resistance that the bulls want to see a close back above. That's a key Fibonacci retracement. On the bottom side of support, 1021 to 1027 and a quarter is the recent lows and the 50% Fibonacci level that we've been trading in through since really the beginning of the year. So those are the levels we're looking at in the range that we're trying to play. I think weather is going to become a more pressing issue as we get towards the back half of July and into August, as heat could really have a potential effect on the potential yields going forward. Going to the wheat, surprisingly holding up relatively well. It has been the laggard here over the past several months, but I think we're starting to get a little bit overextended to the bottom side, so you're not seeing that continued pressure. I'd like to see the funds start to cover some of their net short position, and in order to do that, they're going to buy back up the market. So if we can maintain price action above the recent contract lows of around 415, I think that presents a good risk-reward ratio to the upside. So those are some of the things we're looking at. That's what you should be looking at too. This has been Oliver Slope with iiTrader from the floor of the CME.